Big money is not in the buying and selling, but in the waiting. Charlie Munger. Alright guys, time for portfolio update. Those who are new in this channel, a quick overview what we do. Throughout this entire year, we are buying one stock each month and update you what is happening in our portfolio. Now guys, this is real portfolio, this is real money. If you want to see what we are doing, stay with this video till the end. We do not believe in pitching big ideas and publish video about that. What we say, we practice, and what we practice, we show you transparently. If you are our existing subscriber, you already know the format of this video. We will give you the name of the stock and then we will show you the entire portfolio and the allocation. And finally, we will show you the performance of this portfolio. One more thing, you probably know that our portfolio remains public all the time. You can check our portfolio performance any day, anytime. The link to access our portfolio is in the description box. Feel free to take a look if you are interested. Enough of talking, let us jump to the discussion. Here is our portfolio. As you can see, our recent buy on October 1st was PI Industries. We bought 10 units of PI Industries at 3,125 rupees. Currently, PI Industries has taken a small dip after their acquisition deal was cancelled. After our purchase, that is why the stock is down by 12%. Does it bother us? Absolutely not. We do not get carried away when the stock price increases or decreases. Before PI Industries, we bought Relaxo and it is up by 15% now. There is nothing to feel happy about that. We think it is completely useless to track the price and feel happy or sad about that. And we believe not in buying and selling. We believe in sitting tight on high quality business and ignore the news as much as possible. So far, we have 10 stocks in our portfolio. All are high quality businesses. It is true that we do not check the share price. We are more interested in the business. It is getting more and more difficult to track more and more businesses in our portfolio. So we may not be adding new businesses in our list for a while. We have divided our non-banking business and banking business separately. At first, let us talk about non-banking business. We have 8 businesses in this list. Let us see the growth of these 8 businesses in last 5 years. 6 out of 8 businesses has grown its revenue by double digit. Highest growth was shown in PI Industries. Only Relaxo and Pidilite grew 8 to 9% per year. That was on the lower side. We are not taking 10 years because it is too old, may not have much of relevance to the present day. Guys, just not the revenue growth. We have to see the profitability as well. If the profitability does not increase in the line of revenue growth, it simply means that the company are not able to make profit proportionately. In our list, except Asian Paint and Dr. Lal Path, all other companies are showing higher EBIT growth than its revenue. Why EBIT? Because EBIT is earning before interest and tax. We know the corporate tax was cut in recent time, so profit after tax could be an inappropriate measure of running growth in the last 5 years. Next, let us look at ROE. By the way, why ROE? Why not ROCE? Capital employed of ROCE accounts for debt and equity, right? And ROE is the return on equity. Debt is not considered here. Since most of the company in our portfolio have negligible amount of debt, ROE and ROCE will not be very different from each other. In India, the cost of capital is around 12 to 13%. We see all our portfolio companies are giving ROE more than 12 to 13%. PI Industries is giving lowest ROE among the list. Nestle India is giving the highest. Overall, all the companies are doing fine at their businesses. So we feel no worries in the share price movement. Here is the portfolio performance over time. Blue line is the amount of money invested in this portfolio. Green line is the benchmark and gray line is our portfolio. As the time progresses, the gap between our invested capital and the portfolio valuation will widen, and hopefully our portfolio will generate better return than the benchmark. If same amount of money was invested in Nifty 50 at the same day of our stock purchase, Nifty 50 would have delivered 17.4% return. Our portfolio has delivered 13.4% return so far. That means we are underperforming by 4%. Means alpha is -4. Does it concern us? Absolutely not, because it is too short time to make any conclusion. If you want to know how to calculate alpha for your own portfolio, we have made a separate video on that. You may check it out, the link is in the description box. Coming to the volatility of the portfolio, we see beta is 0.87. Beta less than 1 means the portfolio is less volatile than Nifty 50. Guys, portfolio of 10 stock could be less volatile than Nifty 50. Here is the proof. Now let us see the portfolio allocation. We initially targeted to have equal amount of allocation on each stock because it is easy to track. Every stock is expected to have 10% allocation in that strategy. But as we see, the stock price moves ups and down every day and the valuation of the position also changes in the same line. Asian Paint, Pidilite and Kotak Mahindra Bank, these are top 3 allocations in our portfolio right now. Of course, this number will keep changing and we will give you an update next month. We like to buy and hold and ignore news as much as we can and silently create wealth. This is a live show. We are creating wealth in front of you. This is a long-term story. This video you have just watched, it is an episode of the live show of wealth creation. To understand our thought process and to stay connected with other long-term investors, you may join in our Telegram group. We have more than 1200 channel members right now who has same mentality that we have. If you want to be a part of them, feel free to join. It is free and it will remain free forever. That is a promise. With this, let us wind up our video here. Thank you for watching. We will catch you up in the next video. Until then, take care. Bye.